It's been a tough week for markets and a very volatile one as markets have tried to absorb the risk that we're contemplating as we go into next week. We had some information from the FOMC where interest rate trajectory has become flatter, but the key catalyst for markets was the referendum polls as they rolled in this week. So it's a big move towards leave early in the week, and we saw a very weak FTSE. 10-year yield went down. We also see the sterling fall quite considerably. And then we've seen a little bit of a rebound over the last 24 hours. So here we can see the Brexit polls from Betfair. We're showing a 35-65 in favour of Remain. The internet and telephone polls are more 50-50. So it really is too close to call. What we're looking at is momentum, and what we've seen is a clear indication that those people who've got a firm decision made have been in favour of leaving. So it's going to be about turnout. It's going to be about how informed people are in their own minds, and typically there is a factor towards the end at the death where people do tend to swing towards the status quo. So if you look at past referendums, that's been around a 20% swing back towards Remain, but clearly people are clearly energised, and this is a highly emotive subject, so one won't necessarily see that. If you look at markets, you can now see that the sterling currency has been very weak against the dollar, so we're back to that level that we visited in 2009, in 2001, and back in 86, so prior market events. And equally, the FTSE All-Share has been very weak against the S&P. This is rebased into sterling, so you can see there's a currency and a market effect, but that differential is around 20%. So there is value in the UK market in our minds. However, clearly we have to get past this event on the 23rd. When looking at stocks that potentially could be beneficiaries, we're looking for oversold businesses that we think are very high quality, that will benefit from a Remain vote, or typically will get significantly cheaper and give us an opportunity in the event of a leave. So we've got Land Securities as a good example of a stock that the RSI, which is an indication of how oversold the stock is down towards the 30 level, which typically is a great buying opportunity for this stock. Lloyd's touched 30 and has bounced off that level over the last couple of days. Again, looks in oversold territory. BT Group is another stock that we really like. Again, touched that 30 level on the relative strength index. And has bounced a bit off that, but as you can see has been very weak, coming off £5 all the way back to 4. I think that story in BT is actually strengthening as we see prices going up in European telecoms, and we're starting to see the leverage coming through from their operational gearing into that EBITDA number. So looking at next week, clearly it's all about the vote, but we have a number of companies reporting. The most important for us will be Accenture on the 23rd. Accenture has obviously been a good performer into these numbers. Last quarter was a strong quarter for them. We expect the digital unit of that business to be continuing to drive the overall operating performance of the business, and we'll be very interested to see how that is playing out. Thanks very much.